Hello, so this is for the subject Strategic Business Analysis, and the topic for this one, international pricing, are considerations when you are going to set your prices in an international market. Okay, so we have here an article from your article, library.com. Okay, although in previous videos, especially about international market, we've already tackled a few things about the price, the considerations that you need to take into account before you set the price of the product that you're offering in an international market. Okay, so going through the contents of the article, it provides information about meaning of the term international pricing. So price may be defined as the exchange of goods or services in terms of money. Without price, there is no marketing in the society. Okay, one of the factors inside the marketing mix. You have your product, price, promotion, and the place or distribution. So a manufacturer price represents quantity of money or goods and services in a barter trade received by the firm or seller. To a customer, it represents sacrifice and hence his perception of the value of the product. Conceptually, it is the price. Price is the quantity of money received by the seller or in a barter, so the quantity of goods and services rendered or received by the buyer. In the what do you call that? POV, point of view of the buyer. The term price needs not be confused with the term pricing. Of course, it's different. Price is, the amount itself that has been set, and pricing is the process of deciding the amount to be charged for a particular product or service. Okay, there's another thing. Price does not necessarily equate to the value of a particular product or service. Okay? According to Professor Casey Kite, pricing is a managerial task that involves establishing pricing objectives, identifying the factors governing the price, ascertaining their relevance and significance, determining the product value in monetary terms, and formulation of the price policies and the strategies, implementing them and controlling them for the best results. Okay, so let's focus on this one first. Okay, identifying the factors governing the price. Considerations that we have: is there already an existing product or service in the market? What's the price being charged by the competition? And of course, would also depend on, the features, the benefits that your particular product or service is going to give to the customers. Okay. And then other factors to consider, you have the cost of producing it. And then, with regards to the cost, of course, you'd have to consider the manufacturing cost. You have sometimes you have to allocate as well, or let it absorb, of course, your administrative expenses, the after sales, warranties, returns, things like that. Okay. And then establishing pricing objectives. So what is your goal for establishing the price? Do you want to be a cost leader, or do you want to be perceived as a quality product or service? Okay, there we have that so-called customer perception of value. By the way you price your products, they think that the more expensive a product is, the better the quality, or the better the functions, or durability maybe. Is actually the benefits that they get from the product. And they have this perception as well that if a product is priced too low or very cheap, they think that it's probably substandard, quality is not that good, or it's going to be damaged or ruined in the short term. Okay, so there are things like that. So you have to establish your objectives. Do you want to be a cost leader? Do you want people to see you as premium product? Things like that. Ascertaining their relevance and significance. Okay, sometimes there would be factors that would counter all the other considerations. For example, you don't have, let's say there's already competition, there is a so-called cost leader, and their products are really good and yours are not better than theirs, so there's no way you can price your products too high. Even if you do, And even if there are customers who would probably check out your products, think that it's actually better than the others, there's a possibility of backlash, right? Because of feedback, we thought that this product is going to be good or better than the others. Apparently, it's not really that way. So you have to protect your reputation and image as well. You have to make sure that you deliver the quality that because customers want. Of course, you have your advertisement, what you are communicating with the customers, and then there's the fact that there's a market expectation as well, and they want to be satisfied. Okay, that's why you have your market research, market analysis before you put out a product in the market. Okay, determining the product value in monetary terms and formulation of price policies and strategies. Minimum, of course, you want to price your products higher than the cost. Okay, and then all the rest would follow that. Implementing them and controlling them for the best results. So since there are a lot of considerations or factors to consider before you set a final price, then it's kind of difficult, a complicated process, and you need to find a balance between all those factors depending on which ones would provide you with the best results aligned with your objectives. Okay, so again, this would depend on the product, on the industry, on the scale, on what your objectives are. You want to be well known for quality, or you want to be well known for the cheapest but quality still, right? Pricing refers to the value determination process for a good or service, and encompasses determination of interest rates for loans, charges for rentals, fees for services, and prices for the goods. So these are some of the costs that you'd have to incorporate with the price. And then for the value, it's not really the actual value, because value is simply perceived by the customer, and it would depend on how much the customers would be benefited by using the product or service. Okay. Pricing decisions are difficult to make even when a company operates only in the domestic market, so even more so in international markets, right? Multiple currencies, then we have trade barriers, additional cost considerations, and longer distribution channels make price determination more complex in international markets. Actually, in the previous videos, international markets, we've also tackled a bit about the price, right? Globalization of business has put increased pressure on the pricing systems of companies which enter international markets. These companies have to adopt their pricing structures as they graduate from being purely domestic players to exporters, and then to overseas manufacturers. You're an exporter if you produce a product here, you sell it internationally, and then you're an overseas manufacturer when the manufacturing process itself is also done in the foreign market. Okay. The earlier pricing structures used by them may no longer be appropriate in the complex international environment, characterized by high competition, more global players, rapid changes in the technology, and high-speed communication between markets. Alright, so again, adaptation to changes, it's a very much needed characteristic of a business to survive in international markets. Because changes happen fast and often, so they have to adapt to that, cope with those changes. Companies operating in international markets have to identify best approach for setting prices worldwide. Variables that are considered variables that are important in determining prices in international markets, the considerations, and then level of importance that needs to be given to each variable. This will depend on their objectives, right? Pricing objectives. The variance in prices across markets, variance in prices across customer types, essentially the breakdown of your target market. The factors to be considered while determining transfer prices. Pricing decisions cannot be made in isolation because pricing affects other marketing decision variables and determines the following. Customers' perception of value. Again, there are people who think that the more expensive it is, the better the product is. And when it's priced too low, there's, question on its quality, right? Level of motivation of intermediaries. Since, you're operating international markets, you're going to transact or involve other parties in the conduct of the business. You might have to enter into contracts with businesses situated in that country. So you have to, in a way, communicate properly so that they're also motivated to market your own products. Okay, in a way, they should market it as if the products are their own, right? Promotional spending and strategy, again, this would be affected by different factors. You have your product life cycle, you have your position in the market, and then international marketing, so you have to consider competition, and then all the other factors that we'll discuss under pricing methods, pricing strategies. Okay. Again, this is just one of the factors in the marketing mix. So you have your product, price, promotion, and place. Sorry, forget the others. Pricing and import is an important decision in any business, be it domestic or international, directly affects revenue and thus profitability. Further, appropriate pricing aids proper growth, as development of a mass market depends to a large extent on price. If you'd be able to properly penetrate the market, sometimes price is a huge consideration, right? Especially on the point of view of the consumers. If it's reasonable, justifiable, properly communicated, then they might be tempted to buy the product or the service, right? But if it's, you're a newbie, you're not very well known, and you already price your products too high, then you're probably not going to, get the attention of the market. For business dependent on acquiring business contracts through competitive bidding, such as the construction and mining industries and drilling companies, a poor pricing decision threatens survival. Okay, sometimes, even if you're planning to price your goods or service low so that you can penetrate the market, you have to make sure that, again, the price would be above the cost so that it would not, it will not cause you to suffer losses. And even if it's above the cost, you have to make sure that you have a bit of a profit margin still, okay, considering all other expenses of the company. Too high a price may mean no business, while a lower price may lead to unprofitable operation. In many cases, the price indicates a product's quality. Okay, and that's one of the misconceptions, but it's there. If the Mercedes car were priced in the same range as the Oldsmobile, the Mercedes would lose some of its quality image. Okay, Mercedes, what's that? Lamborghini, and then you also have Apple, of course. Finally, price affects the extent of promotional support to be allocated to a product. Like, how are you going to market a very high-priced product? How are you going to market low-priced product? So, it would be a different approach, of course, right? And of course, you would have different segment of the market to be targeted if it's priced too high or if it's priced too low. Okay, so again, those are just some of the considerations when setting the price for an international market. All right, so that's it for this one. Thanks and bye.